happy to talk about this. I think there's a few things that are really important to understand. I've been watching this development really since 2014 when the project started, and it had a bit of a front row seat on it. And I think one of the really critical things is that in China, unlike in the United States and unlike in other parts of the world, there was already a rapidly adopting digital money system run by the private sector. Alipay and WeChat Pay collectively used by over 1 billion people. So this is a country where you had very, very large private sector players that effectively were becoming the private digital money system in China. And as we've seen in other industries, and as we've seen very, very specifically in the financial sector, China has been reasserting its power over the financial system. And in many ways, the e-CNY, as it's now referred to, is creating a government-run alternative to these private sector digital monies. There's, in some ways, the rise of these giant internet companies and technology companies is a threat to the power of the Chinese government. And so in part, this is a response to that, is to create an alternative that is fully controlled by the government. And of course, as you've emphasized, that introduces different levels of potential oversight, let's just say, that are not in place in a private sector based digital money system.
So the private sector fintech entities are seen as a threat, in your words. U.S., we have private sector fintech names here. Should the U.S. Be doing something similar? Should we be far more advanced in an effort to create a digital currency at this point in time? Should we be threatened by the fact that China is so far along in its quest to create this?
Well, so I think the beautiful thing about the West and the beautiful thing about the United States and many other developed economies is that there's a long, long history of the private sector driving fundamental innovation, whether that's core technologies like the internet itself, like the development of major standards for how we operate in commerce and business and in financial services. In fact, virtually every major electronic money innovation that we know of today as individuals and businesses are created by and operated by consortiums of private sector companies, whether that's the international wire transfer system, credit card networks, Apple Pay, PayPal. So the West is not a place where the government runs everything. Industries are not nationalized, and so there is that long history. And in fact, that is exactly what's happening in the digital currency space. Today, just to be clear, dollar digital currencies that are operating in a free market environment on the internet are already handling over $1 trillion a year of transactions. The e-CNY is said to have done 5 billion in CNY transactions. There is a rapidly growing dollar digital currency industry. And so in some ways, the U.S. is already ahead. And my ultimate response is, I don't believe that the United States strategy in this particular space, but in a number of others, is to try and out-China China. We're innovating through private sector in space exploration, electric vehicles, so many other places. And in digital currency, that's exactly how we should be growing these industries.
How much of their quest to create a digital currency do you think explains what we saw recently with regard to the crackdown on Bitcoin miners and the crypto sector in China?
There are many different issues here. China is very, very serious about the Paris Accords and about climate. I think the specific areas where they asked miners or forced miners to close up were in areas where it was not clean energy. All of the mining in China is not stopped, but that was a very, very particular focus. And the Chinese government has many times, not just in the crypto markets, but in the stock market, in fintech lending markets, and so many of these very, very diverse, innovative spaces, has had to come in and basically crackdown is what we use, but further regulate these, because of concerns over social stability. If you have huge amounts of the Chinese population speculating and then losing money, they're going to come to the state and they're going to ask the state to deal with that. So anytime you see a risk to social stability, the Chinese government steps in, whether that's in the financial sector or in other sectors. And I think that's what's going on here.
Shepard Smith here. Thanks for watching CNBC on YouTube.